Hey everyone, welcome back to our channel. Today, we're going to dive into the world of BPO Financial Accounting. Have you ever wondered what BPO stands for and how it relates to financial accounting? Well, you're in the right place because we're going to explain it all. Before we dive into the details, let's start with the basics. BPO stands for Business Process Outsourcing. It's a practice where companies outsource certain business processes, such as financial accounting, to specialized service providers. These service providers, also known as BPO firms, handle these processes on behalf of the companies, allowing them to focus on their core operations. Now, let's see how BPO financial accounting actually works. When a company decides to outsource its financial accounting, it enters into an agreement with a BPO firm. The company provides the necessary financial data, such as invoices, receipts, and bank statements, to the BPO firm. The BPO firm then takes over the responsibility of processing and managing this financial data. Within the BPO firm, there are dedicated accountants who are trained in financial accounting. These professionals work on the company's financial data using specialized accounting software. They perform various tasks, such as bookkeeping, preparing financial statements, managing accounts payable and receivable, reconciling bank transactions, and generating reports. There are several benefits to outsourcing financial accounting to a BPO firm. Firstly, it allows companies to access specialized expertise. BPO firms have a team of experienced accountants who stay up to date with the latest accounting standards and regulations. They can provide valuable insights and ensure accurate financial reporting. Secondly, BPO financial accounting can help companies save costs. By outsourcing, they avoid the expenses associated with hiring and training an in-house accounting team. BPO firms often operate in countries with lower labor costs, offering significant cost savings. Another advantage is scalability. BPO firms can adjust their resources based on the company's needs. Whether it's a small startup or a large corporation, BPO financial accounting can scale up or down accordingly, providing flexibility and cost-effectiveness. To summarize, BPO financial accounting is the practice of outsourcing financial accounting processes to specialized service providers. It involves handing over the financial data to a BPO firm, where dedicated accountants process and manage it using accounting software. This outsourcing model offers expertise, cost savings, and scalability for companies of all sizes. If you have any questions or want to share your thoughts, feel free to leave a comment below. Don't forget to subscribe to our channel for more informative content. Thanks for watching, and we'll see you in the next video.